Hello, I'm the Shadow Trader. This is Shadow Analysis, and today we're going to be doing part two to my technical analysis video that I made already. So for this, I am just going to go over, I'm trying to remember everything that I did and then go back over it with you and just kind of like just elaborate on everything and just make sure you got the basics down pat because you can trade with the basics, right? The basics is resistance to support. Well, you got resistance right here. That is where the price action stops you from going higher. You got support here, which keeps the price action from going lower. Pretty basic, right? Support's like the roof of your house. If there was no gravity, the roof would keep you from going higher. But if there was too much gravity, the floor would keep you from going lower. Oh, that would suck. This can go lower. This could form some type of double bottom here. I don't think I don't think that's gonna happen, right? I actually think that you're gonna go lower. Right? I got that here. And why? Because of the bull trap. You got the trend line here. You held resistance. You popped off here, held resistance here, here, and here 4 times. And then you smacked and then you smacked at the apex between the trend line and the resistance line. That's called a bull trap. You are going down for sure. Doesn't mean you can't come back and regain that support. But here I have you ripping right through. That may not happen, but if that did happen, you could rip right through, come back, regain the support here, keep going higher. And then as you see, if you want to keep going higher from there, you have to come down again at some point. So when you do that, you want to come back down and you want to hold the previous resistance as support. You want to create a support line here, turn this from a place of negativity to a place of positivity. You know what I mean? And then we could probably go higher if it looks good. You always want to check everything, check your indicators, make sure it looks all right, make sure it's not still too overbought, make sure it can't still come down pretty harsh, and if it can, make sure that whatever you're doing, that it's a quick day trade and not something you're holding to lose money on because you didn't do your analysis correctly, right? And what kind of trade are you getting into? That's the first question you should be asking for yourself. Day trade or swing trade? I normally try to swing trade. I normally try to get the big moves, so I try to look for stocks that are pretty oversold and look like they're about to flip or have been churning for a long time and it's really just now showing. I like stocks like that. You get the big move out of it. You can stay in it for the long haul, get an even bigger move out of it. I think I'm going to do that with PRSO. I think I'm going to stay in it for the biggest move. I've got to put more money in though. I'm slacking off in that department. But back to the task at hand, analysis. So I taught you support resistance, your consolidation zone, how support resistance works. Remember, when you come up and you break resistance and you come back down to claim it as support, it's the same situation in reverse. If you're trying to short it, if you're trying to make money on the stock going down, you want it to pop down below support, come back up, and have it now become resistance, and then you can take that big move down. And look, it'll probably happen at some point. I don't know if it's going to happen now. It could. I hope not, but I think it'll happen probably after this move here if earnings are strong enough to push it up because you got these gaps down here that need to be covered. Now that's another thing that I haven't gone over yet is gaps. When you have a gap, it's because of price action pushing up when the market is not open. The market closes at 4 p.m. every day. You have the post market and you have the pre market. You have the post market until 8 p.m. and you have the pre market at 4 a.m. So if price action moves, it doesn't get tracked while the market's closed. So if it moves higher or it moves lower, you're going to create gaps like this when the market opens, because if the market opens higher, you're going to have a big giant gap down here, or if the market opens lower, you're going to have a big gap down here. And all of these gaps have to be covered again. They always come back. Check back in history, bro. They always come back to get covered, 100% guaranteed. The question is when. They could create a gap now, and then they cannot cover that gap for years. I've seen that plenty of times. I've been in stocks for the long haul on a downfall, buying more, just watching it cover gaps that it hasn't seen in 3 or 4 years, maybe even longer. I'll give you an example of a gap that hasn't been seen yet. Probably never will be seen again, but you never know. And that's the $60 gap on Apple. When Apple was trading around $120, I was expecting that $60 gap. I felt like if the market had crashed or had a significant fall, the $60 was actually, it fell all the way to $110. I felt like it was actually going to hit it. I wasn't in it yet, but I knew that as you inch closer, I just wanted to see Apple at $60, and we almost had it there. And that gap was never covered, so it still exists somewhere. I don't know. Actually, you know what, guys? Let's take a little detour here and let's look at what is Apple's ticker? Yeah, I think it's that one. Is there still a gap at $60 on Apple? Uh, yeah, and it's never gonna get covered. Look at this weakness. Look at this gap. This stuff's never gonna get covered. $97 when this thing was trading. Like I said, I was in this trade on the call. I got in on puts here, got in on calls here. I think I got out around 120 here. Here. Yeah, so I got out around here. Kind of a stupid move, but I wasn't as experienced in the market back then either. I was still learning. Gaps here that you covered. So if you just go look back, you'll see that there's a lot of gaps that are covered, and gaps act as magnets. So even if gaps are already covered, the stock, and it looks like it will because of all this weakness, the stock can still come down here, right, and still cover the gap again because it acts like a magnet, and price action is attracted to that gap. So if it's heading down, just know that if there's gaps down there that are already covered, it's probably heading down that way. Those are usually good price targets for like put options and whatnot. So because like I said, they're magnets, so like price magnets. You can see I've been trading this stuff before. Fun times back in the days, back in the good old days of not knowing as much. And see even here you got your support, resistance, but this can actually go higher. Boom. And then actually, yeah, that's actually right. So this was the previous highs here before here. So the fact that you're holding this right now, and you can see it's extremely weak, the weakness here, the weakness all over, it's coming down, it's coming back down to that gap. And it may or may not go lower, I don't know. But it's not holding this previous resistance as support so well. This is an example of stocks that come down that you want to hold, you want to see hold. Remember, when you're looking to see when price action comes down and you want to know, like, what am I holding? What am I waiting for? Well, always go left. Always turn left. See what happened. You got previous highs here. You got previous highs here. You want to mark all these highs out, but you always want to mark the previous high out because if price action doesn't hold the previous high, you're not going higher. If it breaks below the previous high, you're going lower. You can live in denial land all you want, but you're going lower if it breaks the previous high. Not to say that your stock won't go up again, but that's just how technical analysis works. So if you're trying to trade, just remember that. And then if you hold the previous high, if we continue to hold, we can have all the weakness in the world. But if we continue to hold this and then show continuation, it's probably going to go up. But You look at here, weakness. This can come down here. Probably hold here. Weakness here. I don't know. We'll see. But that's how support resistance works. Those are how gaps work. Um, just basic stuff. And now I've already gone in indicators. I don't want to go too deep into the indicators I use because you don't have access to them unless you decide to pay for 'em. I mean, if you do, guys, by the way, I get it from Easy Peasy Trading. I get a discount because I was one of the people who got in first. The alpha testers or beta testers or whatever. And so I got a permanent discount. So I'm always going to be paying for this because I always use it and it helps me and it makes me money and it offers me a bunch of different things. It's really like similar to like unusual whales and their type of stuff. But to me, nothing beats easy peasy. And I'm not getting paid to say that or anything. It's just something I use. And in case you guys are wondering where I've gotten these indicators from that I keep looking at, that's where I get them from. So, um, but you got things like options chains, you got dark pools, you can look at stocks as they're being bought up, you know, and there's so much more that you can see that he offers you and um he meaning user of intellect, he comes up with new ideas all the time and he's always adding new stuff. So I always get excited when he comes out with a new indicator and he's still got more he's coming out with that I don't have access to yet and I can't wait to share them with you guys. But in the meantime, you know, that's why I'm here. So I think we should go over the basic indicators. So let's get rid of these and get rid of these. Now, based on what I said, if you're using indicators, this is pretty high. Did we say it was going to go down? We did say it was going to go down. It did break the EMA here, so it's definitely going to come down, guys. Definitely a bearish move. I would buy a put here um, for probably a month or two out and let that bit ride. Here would be if you want to get that greedy, I would just buy it for here. It'd be kind of pricey, but and then you could sell at the gap, or you can wait and let it come down here. You got support here, so yeah, around here. But you got another gap here too. We'll see. We will see, guys. Anyways, back to what I was saying. So using RSI, you can see it's coming down. You can also use MACD. MACD is something different. You know which one I love is money flow. It's one of my favorite indicators to use. Because you can kind of see when stuff's being pumped and when it's being dumped. So you can see here that there's a lot of money right now, a decent amount of money anyway, flowing into Apple. But you can see here where a lot of money is flowed into it, and you can see it's hit new highs. But you can see as it falls off here, so you can see that you kind of topped off here pretty well on the money flow, and you can see since then the money flow has gone lower. It went higher here, but you hit a lower high, and then you went lower. So and it's kind of congruent with the downtrend. And then I also like what was I gonna show you? I think I was gonna show you what is it? MACD, right? Moving average convergence divergence. I like that word for some reason. I like the whole thing. I like saying it. Moving average convergence divergence. All right. Weak, weak, very weak, guys. As Cartman would say. You're starting to get some red in here. You're starting to pour off. This looks rather weak just on the price action alone. Again, we didn't have to look at these. I showed you this and said weakness. complete weakness. But again, we use indicators to try to confirm that so to make us feel better. As I said before, especially if you've got a lot of anxiety like I do, you want to make sure that you're 100% sure certain of what's going to happen before you do it. I tend to get a lot more anxiety no matter um how confident I am. I tend to get a lot more anxiety when when I just do things on the fly or I don't plan for it. Um and to me, I don't know why I still do things like that, but sometimes I do. And those are mistakes that you shouldn't be making, but those are mistakes that you have to train yourself out of and not fall for the traps. That's important too. But we're human. We all make mistakes, and it's okay as long as you recognize that mistake and you fix it right away. That's okay. Making mistakes is a part of growing. You got to make mistakes, or you're not going to get better. Nobody's perfect, right? Even the big guys lose sometimes. They just have more money than us, so they can lose a lot more than we can. We just happen to lose a lot more than they do. Yeah, unless you're Nancy Pelosi. She's like the god of trading, so and it does look like they have an earnings coming up here, if this is correct on here. TradingView has let me down more than once. So we shall see. It could be falling into earnings, as I said before in a previous video. A lot of times you'll see earnings happen, and then while stocks are already going down, it'll continue to go down into earnings. And then at some point, when the bottom comes, earnings already happen, stocks tend to turn around and go up. So if you're looking at this from the long haul, as I said, I would buy a put here. You're done. You're pretty much done here. As soon as this breaks, it's put time. You can buy here if you think it'll break this. It still can hold it. It still can hold it. It just doesn't look like it's going to. But if you want to be 100% sure and not be worried on the way down if it's going to break or not, then just wait for the break. Wait for that confirmation. Buy, and then after you buy, get this move, get out, get ready to move back up. Don't be greedy. Take the move. Take In football, for the offense, there's a saying that goes, take what the defense gives you. Well, in stocks, take what the algo gives you. If the algo gives you this, don't want more. Just want what it gives you. Because if you want more, it's just going to take it from you. It's going to rip it right out of your hands and it's going to lick your tears like it's Cartman. All right? So don't do that. If you're still doing that, it's okay. There's greed in all of us. I'm still guilty of all of these things that I'm telling you not to do. But it's good that I know not to do them. So I don't do it often. These are still mistakes that I make every once in a blue moon for whatever reason. My brain just can't understand the concept of no. You know what I mean? Most time I'm most of the time I'm sure. I've done my analysis, I've done my waiting, I've put in the patience and I get my moves, you know what I mean? I get the moves that I'm looking for. So, I don't know if I want to continue this video from this point forward. I think I want to make a part three now that we've pretty much gone over the same thing we've gone over in the second or in the first video while adding a little bit of context, adding in a few things here, little sprinkles like the gaps. We've gone over the gap support. And one thing we haven't gone over that has to do with this is I call these consolidation zones, but these are also called supply and demand zones. Okay, so you can trade supply and demand zones, right? You can trade this if you once you get into options trading. If you're not already into options trading, you can use what's called butterfly options to trade these sideways moves, and you can trade these demand zones sideways if you get long ones out. Same thing up here. These are called supply zones, right? They usually dump their supply here, and they buy back into the demand. Okay. And I love trading supply and demand, aka support resistance. It's the easiest way to trade. If I'm trading a bit shorter, if I'm going out like really long, obviously I'm just letting it fly until I feel like I've seen a top. I'll get my price targets and I'll say, okay, it hit all my price targets. I'm getting topping signals on all my indicators. I think it's time to get out. There's no point in being greedy, right? Once you've made your money, you need to go because there's always something else to get into every single time. Don't get a hard on for just one stock. Get in, get out, move on to the next one. As simple as that. If you're trading it, if you're doing a quick trade, if you want the bigger move, and sometimes a lot of times I do. And a lot of times I'll take that bigger move. I'm gonna take PRSO. If Village Farms comes back down, I'm probably gonna buy some of that again. Because I kind of know where that's going already. TS, $20 or higher. But yeah. Um, yeah, I don't want to get into anything too much more advanced yet, but basically from what I taught you, the basics, you can trade with that every single time. And even using just basic indicators that you get for free. And I'm gonna teach you more about like indicators and stuff like that if you don't know already, like moving averages and how to tell when stocks go bullish by using multiple indicators like moving averages. And if you got the paid version of TradingView, you can use more than just two indicators. But as I said before, I'm a cheap bastard, so I'm just gonna swap in and out. Eventually, I'm gonna get the paid TradingView for you guys, so it's a lot better for you. Um, but as of right now, I don't have it. I don't feel comfortable paying for it at this time. But soon I'll have it for you guys. That way we don't have to swap between where's the X at? There it is. That way we don't have to swap between indicators all the time. And I think there's an indicator that Easy Peasy has that I can't even use because I don't have the highest subscription. So he did make a light version of that so that I can use something similar to that that I actually like better than the other one. But I would like to use both. Why not? Anyways, guys, I think I'm gonna end it here. Give me a thumbs up if you like this video. I know it was like a lot of the same, but I just kind of wanted to go over everything and just a little more clarity. I just kind of drill into you about support and resistance and how important that is, how important it is on the break and how on the way up, and how important it is on the break on the way down. What you need to do. Remember, if you break resistance, one more time, we're going to recap. You break resistance, you come back, hold it, go up. You could go up big and then come back down later and hold it and then go up. Same thing if you go down. It's the same exact thing, just in reverse. You want to hold it and then continue down, or you continue way down. For example, like the bear flag and the previous analysis that we went over, there's a bear flag where you go all the way down pretty far, like $10 or whatever, and then you go up slowly, you make a big move up and then you come back down, right? And that could be your resistance touch after it's already gone down pretty substantially. You could have a massive move up, trapping all the bulls, uh, getting this resistance touch here, and then pulling the rug on all the calls or all the shares that you're holding. Brutal, just brutal. But yeah, we'll go over more stuff. I'll make a part three, probably a part four and a part five. There's a lot of stuff to go over. I didn't really want to do like a how to, but that's kind of what it's sort of becoming. I'm just trying to teach you a little bit of the things, my mindset, how I trade, how I see things when I trade, what I use when I trade. EMAs, SMAs are very important. I use those all the time in my trading. I would be lost without them. On big moves up because it's a great way to find support. So, if you again, please give me a thumbs up if you like this video. Go ahead and subscribe because if you want to see more, I'm putting more up every single day this week. I think this is my last video of the day, but if you hit that notification bell, you'll get more videos tomorrow and the rest of the week. I don't have anything planned for the weekend, but I probably will start posting some stuff on my calendar soon. But I do have planned at least one thing planned for next week already, and that's NBIS earnings. I might go live for that. I might go live this week on Thursday. I don't have anything planned for that day, so we could just look at the market that day or something. I'm here all day. I'm home. I literally have if I have anything to do, I'll try to get it done super early, and then we can look at the market together on Thursday and see how it trades. You can kind of see how I look at things, in real time. And then next week we have NBIS earnings, so I want to go live for that and see if I can't make some money that day. And then if I do, I want to get out if it hits my target, and then we can look at different stocks and decide what else I should jump into next for a nice big move up, or if I should just dump all my money into PRSO and wait for that move to go up. Because I think PRSO is moving down now, so I can get it at a very nice price, and I think it's going even lower. So I'm kind of excited about that. Yeah. But anyways, guys, comment down below if you want me to look at anything, if you want any other types of videos besides technical analysis, besides teaching you technical analysis or doing technical analysis of stocks, if you want to see other types of videos, just put it down below. I'm interested in whatever you guys want to see. I'm here for you. Okay, so whatever you want to see, just put it down below. If you want me to look at more stocks, put it down below. Again, if you're new, you can just type out and you're not like familiar with stocks. You can just type out different companies that you might be interested in investing in or trading and put them down below, and then we can look at them together and see how they are. Or maybe you're just curious about a company. Maybe you just want to see a company and see how it's trading in the market. Um, and thank you very much to everyone who's already commented. Put stocks down below. You've created plenty of content for me this week. Keep on doing that to create more. If you aren't following me over on X, I'm over there at Shadow Trader 17. Pretty much the same thing on here. Um, and for those of you who have commented, supporting me and showing me love, thank you very much. I really do appreciate that from the bottom of my heart. I love getting comments like that. That makes me want to do more of this. You know what I mean? Because again, I'm here for you guys. Have a good rest of your day. Hope you enjoyed all the videos I've released. Remember, I've got more tomorrow, and they actually might be something I might be interested in buying tomorrow. So you might see that um live as well. All right, so thank you very much, guys. Ciao.